Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at the Exchange ETF conference. Joining us for this segment, we have Jordan Farris. He's a Managing Director of Global Equities and ETF Product at Nuveen. It is great to have you with us, Jordan. Welcome to Trade Talks.
Thanks for having me, Jill.
All right, tell me what a net zero commitment is. Is it something a company makes, a country, an asset manager?
Sure. So a net zero commitment, and for the product that we're going to be talking about, we think about net zero commitments in terms of what companies are committing to. So this is a commitment that a company would make to get to a state where they don't have any emissions going into the atmosphere. And they're going to achieve that by using renewable sources of energy, or they can achieve that by offsetting through carbon offsets or through carbon sequestration.
How are net zero commitments worked into an investment product such as the Nuveen Global Net Zero Transition ETF?
Sure. So the ETF NTZG, I'll take a step back and talk a little bit about the objective, and that'll kind of work us into how the net zero commitments are integrated into our analysis. So we wanted to come to market with a global strategy that would have a dual objective of alpha generation as well as impact. Up until the launch of NTZG, there haven't been that many ETFs or public equity products that could integrate impact investing into the public equity space. We wanted to do that with that product. So we look at a global set of about 3,000 securities, and our portfolio managers analyze those from a fundamental perspective, and they source the best ideas from their teams and from the research analysts at Nuveen. And then we overlay that with a series of carbon evaluations. So we're looking at companies that would fall within a set of different criteria. Climate leaders, climate improvers, or climate influencers. I'll talk about those three groups, and every company that's selected for NTZG is part of one or more of those groups. A climate leader would be a company that has made a declaration that they're going to be net zero at some point by 2050, which is set out by the Paris Climate Agreement, and they've had that plan verified by a third party, signaling sort of authenticity. This is an achievable plan for you to transition away from fossil fuel usage to more renewable sources of energy. Climate improvers are sort of the next step. Those are companies that have signaled to the public that they do have a plan to decarbonize, but they may not have had that verified by a third party yet. What we'd like to see over time is for companies to move from that improver category into that leader category, and we've already seen that within NTZG. And then the third category, I think this is a really exciting one, are the climate influencers, and there are two groups within this. There are companies that are high emitters, so an example would be Shell Oil, which is in the portfolio right now, who has a very good plan to be net zero by 2050, but they also have a big carbon emissions profile right now. So they can make a meaningful change to real world carbon emissions if they are to decarbonize. And then we also have companies in there that are developing technology that will help with carbon sequestration. So the combination of those three groups lead us to a portfolio of 65 to 85 securities. Hopefully will provide alpha, but also drive towards some positive change.
It's one thing to make these commitments, it's another thing to quantify them, right? Mm-hmm. So how are these commitments measured over time, and how are they aligned with investor objectives?
So it's all in the data. So we use various third-party data sources that track carbon on different scopes, so the amount of power that you're burning to run your operations, as well as the emissions that are coming from your supply chain or from your end user. So we're looking at that data on a rolling basis, and we'll report on that as it relates to the portfolio companies in NTZG on an annual basis. And we're looking for a 7% year-over-year decarbonization rate, which gets us to 0% or net zero by 2050. We're also going to leverage the stewardship capabilities of Nuveen. So Nuveen's a $1 trillion asset manager. We own shares of the majority of companies that are out there, and we engage with these companies regularly. So we want to use those and leverage those engagements to work with companies to share best practices for setting decarbonization plans, having them verified to help them get to that state a little bit more quickly.
What type of client has shown interest in NTZG?
That's a great question. So with our entire suite, we've led with the RIA community, and that's going to be the same for NTZG. It's a relatively young product. It was launched last June. So the clients that we do have are coming from the RIA community. Once there's adoption there, we start to see that go into the IBD community and into the wirehouses. Typically, we'll see advisors that have full discretion and or clients that do like that dual objective of alpha generation as well as impact in a single strategy.
All right, appreciate the insight, Jordan. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.